Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I was scrolling through the comment section. Want to make comments on your comments or questions that you have. Make sure that at least you have my opinion on your questions. Again, it's just my financial opinion. It's obviously going to be different depending on who you ask. But I'll give you my opinion, and here we roll. It says right here. I'll start with the first one. I can't believe you just said Apple would be entering a 10-year bear market while advising your subscribers to buy unprofitable uranium companies. I'll be back here to laugh how bad this aged in a couple of years. Well, I mean, that's the cycle. I go by what the market conditions are telling me. We are going into an expansionary phase. When I pull up an expansionary phase, and I'll show you exactly what I'm talking about, because it's important. It's really important to understand all of these things, and I'm pulling it up right here. And this one also ties to another question that someone had, so that's why I'm bringing it up. Here is the expansion phase. We are just entering that expansion phase in the right-hand side. This is the housing starts, this is the average, and we're just going into the beginning of an expansionary phase. This last cycle, when we went into the expansion phase, it was in the expansion phase for a little while before uranium took off and oil took off and all these other ones, because they took off kind of in this range here. So I do think that the bull market in uranium will be very explosive, but I also think that we are very early in this expansion phase of real estate. And this is the driver of inflation. So when looking at all this stuff, when we go under these market conditions, technology companies don't do very well. And I mean, I hate to say it, but uranium companies, some of them are already up 10, 20x or more. And Apple hasn't. I mean, it's gone up, but it hasn't gone up nearly as much as the uranium companies. We are in a pullback at this moment in uranium. It looks like it has further to pull back, and then we're going to go again at it. It's going to go up. Apple, I think, is going to go down with the rest of the technology sector based off interest rates. So that's my opinion. It says, hey, Andy, thanks for your daily updates. What do you think of other commentators in the uranium space that have mentioned that they see uranium being in its third inning in a 2 to 4 year trade versus your longer time horizon? Would love to get your thoughts. I don't know what they look at, so I can't really comment on what their opinions are and how they're coming up with this uranium cycle. If it's liquidity driven, I would think that it's going to be, it could be still a ways away. And the way that I think it's a ways away, and I'm going to start pulling up some charts and stuff, guys, because I don't know. We pulled up the expansionary phase. We know that we're right at the beginning of that expansion phase. Now, if I were to take like a company, I'm just going to pull up a company here. Let's do UEXCF. I think I got, oh, hold on, let me pull up in here. UEXCF. And if you take like the max and we were to look at this entire chart here, we're coming on down. And when we go through these things, you usually get two big humps. This is one hump, and this is like the other hump. Or you could say this is the big one. And where is that? 2010. But it's like scraping along the bottom, and we're just starting to come up a little bit. And I think we're kind of in a little corrective phase, obviously. And then we're gonna move on up. But last bull market, it was more towards the end. Here, let me get like this is Camco, CCJ. It spiked up in 04. It did another top here, like 07. And we had one final one in 2011. So basically, it just followed kind of the liquidity flows. We went into an expansion phase in like 98, 99 in this range here. And it took a little while for this thing to gain some steam. So I would say from 2000's bottom all the way, and it peaked out, 07 and even again in 2011. And then we went into a big bear market. And now we're starting to come back up. I think like this portion on the right-hand side is probably, it's a lead in to something bigger. That's what I think. But I also think that, we've got some time. I don't think we're as far along as what some people think. So some people think that we are pretty far along. I think that it's going to take some time. I don't think we're going to have a blow off top in a year or two, but it depends. It highly depends. If it goes with energy could be rocketing higher here in the next couple of years, oil in particular, and maybe uranium follows with it, and they go up together. So I still think that it's towards the back end of a huge expansionary phase of real estate. Whenever the expansion phase of real estate peaks, that liquidity flow, that is when uranium will peak. And I'm sure the supply and demand dynamics will look good as well. And money flows will be flowing into uranium and other commodities at that time frame in an increasing interest rate environment. So my viewpoint ties more towards liquidity and the flows of liquidity that are tied to the real estate market and interest rates and how they're going to direct money. Other people, they look at the supply demand because they always look at supply demand. And in all honesty, yeah, that's going to work, but that's not going to be your biggest, that's not where the money's coming from. It's not, people aren't going to sell their technology stocks because of the supply demand of uranium. That's the way that I view it. People are going to sell their technology and bonds because of interest rates. The liquidity, the money that's going to come from that into these other sectors is where the big moves happen. It's not because of supply and demand in one sector. And that will push it higher, for sure. But I think it's when the big money rotates around where we see these things blow up to the upside. How does he distinguish between stocks and commodities? Stocks are just ones that consume commodities. Commodities and the companies that sell commodities will go higher. He says money will flow from stocks to commodities. Commodities, including the companies themselves. So it's general stocks to commodity stocks. Yes, that is what I mean. Just want to ask, what's your target PE ratio? I don't have a target PE ratio. What I look at are the market conditions. I don't have target dollar price values. I don't have target PE ratios. I don't have target any of those things. What I have is when the expansionary phase of liquidity, when the market conditions change and we go into a hyper supply phase and our inventories go up in real estate, that money that is created and the interest rates that are going up rotates money over. That money needs to search for a home. And right now, I think that rotation is happening. So mine is based off the conditions for the commodity cycle to exist. If those conditions change, the commodity cycle, I think, will change. The PE ratio is going to be whatever the PE ratio is. There's no magic number for the price to earnings ratio. And even in tech stocks and whatnot, I wouldn't have guessed that they would get this high. But that's all based off of the market conditions and where liquidity was flowing. So I think that the metrics that a lot of people use I don't even use them. All these metrics, I don't have to use them because it depends where the money is flowing. That's what prices stocks, guys. Stocks go up because of money flows. They don't go up and down because of a PE ratio or something like that. That's like trying to drive using the rearview mirror. What you're looking for is where is money flowing and how is it flowing and how fast could it flow, stuff like that. It says, I hope you end up seeing this as I have a question I'd like to address regarding platinum. Been looking at metals for almost a year now, And like yourself, I think platinum's very undervalued and very tempting not to get a few ounces. Clear long-term downtrend break and bounce off retest, and relatively speaking, ridiculously cheap when looking at various ratios. I agree. With that said, the consensus I've seen to hear constantly is apparently it's hard to sell, like say at a LCS, some local coin shop. For example, you won't get your premiums back or only get a buyer at just under spot. Gold and silver is usually recommended as a better buy by these individuals. If I'm not mistaken, how is that not the case with silver and gold as well? Could you explain if this is an issue or an issue you've come across? Not sure where else to ask this, but I don't entirely understand this. Also considering platinum has lower premiums than silver. I don't know, man. Would appreciate it if you could explain, as it's not intuitive to me, and I have no experience selling the metal. By the way, great channel. Would expect it to do very well in the future. Well, yeah, so platinum is undervalued. I completely agree with your first statements there. I own a lot of platinum, physical platinum, like the physical stuff. The consensus, that I don't know if that necessarily matters. What you're going to find out is that the consensus is generally wrong on a lot of stuff. All you have to find is one person that's willing to deal with you. And usually these probably local coin shops don't want to sell you platinum because maybe it's not as profitable for them to deal with it. It's probably harder for them to deal with it, and they don't want to deal with it. So what they're going to do is they're going to recommend that you go into gold and silver because that's where all their volumes are, and that's probably where they make the most amount of money. That's my guess. With my dealer that's local here, he transacts through a third party. It's a more of a larger distribution center or something like that. So when I swapped my palladium, which is far more rare than even platinum, in terms of doing local transactions, he called the third party, and then I went through him to do that. And whether you're getting the spot, usually what you get is you'll get the price that there's like a quoted price, and then there's a price that, what is it called? They will give you the lower one, and sometimes there is a big gap between those two, the bid and the ask price. Sometimes the ask is pretty high and the bid's like $100 or $200 lower on some of these really volatile metals like palladium. So I got the bid price, not the ask. And I did not get anything over spot. But does that matter? Does that matter? Depending on how you do it and how you roll over, you can do a like-for-like exchange. A like-for-like exchange means you don't have to pay tax when you exchange it. So if you pay a premium to do it, and you get a little bit less on it if you don't have to pay taxes on it. So what? Right? So that's if you do a like-for-like exchange, like palladium to platinum, which is a like-for-like kind exchange, and you go through a certified dealer or whatnot, you get to skip out on paying the tax and you can swap your metals. You can do that with gold and silver as well, with a like-for-like exchange. And I don't know if they're changing that rule or not. You'll have to look into it on that like-for-like. But the premiums, yeah, you're going to have to pay a little bit. But I mean, what other options do you have? What if we do have a problem? I mean, I don't view the premiums as a big deal. I don't know. And I know you guys, if you're trying to penny pinch and you're not going to do it based off of having a premium, then I don't know. I mean, the premiums have gone up with time. Some of the stuff that I've negotiated, I got above premium. I got above spot price for my gold when I exchanged it. And for other stuff, it all depends what the premiums are at that time and what the dealer's willing to deal with you. It all depends. That's a decision that you're going to have to make. I think that platinum is so undervalued and that the potential is so great that I'll gladly pay. At the time when it was really low, I was paying like $40 over spot. Now it's more like 75 or 80. And the premiums continue to go up, and I don't see that stopping. So in my opinion, I think it's worth it. And if a local coin shop doesn't want to deal with you Platinum, I would find a different coin shop or a different place. Um, and I think that the potential would be so large that I would drive halfway around the country to do it. And I'm being completely honest. I would drive hundreds of miles to do a transaction once or twice or three times in my life that I've made millions of dollars on. That's the way that I would do it. I know you guys are maybe looking at it because you said a couple of ounces or something like that. I use this as my savings. This is like, you know, something that I store wealth in. I don't. I think a lot of people look at this maybe differently than I do. A lot of people, they look at these things as they just want to make money. I look at it and I look around the world and I say, where can I store my wealth in? Billionaires, when they go and invest, you'll hear people like Eric Sprott and these other guys that have substantial investments. They may buy 20% of a gold or silver company, 20% of the entire company. And do you think they have the ability to transfer in and out? Do you think they have the ability to just sell at a whim? All these billionaires? No, they're stuck in there for a long time. And they hold their shares, they hold their stake in that company. They are looking at it from a perspective that they have gold and silver in the ground that's going to protect their wealth against inflation and other problems. So they think that it's better to store their wealth with gold in the ground that this company has and to extract it at a later point in some time in the future at far higher valuations. So they're looking at it from a perspective that they want to own the gold in the ground. They're not looking at it from a perspective that they want to make money and this is the company that they're going to make money from. I know they want to make money, but they're looking at it as a way to protect and store wealth and the potential opportunity in the future based off of market conditions. These guys can't trade in and out, so they're not trading in and out. Anyone who's been in the game for a while, they're not trading in and out of these things for the most part. They're taking positions, they're taking a stance or a viewpoint for a long time, and they can see the future. They're projecting the future, and they can project the future quite accurately based off of the conditions that are in the market. They see the value, and they don't trade in and out. They're too big. They can't do it. You'll hear people say, I'm buying this oil company because I want my money and my wealth to be protected, and oil is the thing that's going to protect me. So they buy it when it's cheap, and then they sell it 10 years later or something like that. And it's all based off of the dollar and the value of the dollar for the most part. So I buy it because I think platinum is one of the cheapest assets in the world. And if you're going to buy it, I would buy it when it's the cheapest, obviously. Whatever the premiums are, I mean, as long as they're not completely ridiculous, I'm buying it. What are my other options? To go buy a technology company? To go buy some of these other companies? Now, if you look at some of these other companies, guys, if you look at, you're going to be stuck to buying companies in South Africa or Russia. What if something happens there? Your risk is probably quite great in some of these countries. And it could be high risk in America or Canada. We don't know. I mean, there's a whole bunch of different risks when you buy a company versus a physical metal. And you're buying these things at very low valuations at when energy is incredibly cheap, when ESG is at a low, when carbon credits are at a low, when all these things are at a low. I mean, the cost curves could go rocketing higher at some point, and it's just going to push the price of all these things higher. If something happens in South Africa, 80% of the metal may come offline for platinum and palladium as well. What do you think that's going to do to the price? And if you own the company that's in South Africa, you may not get to experience that big move. So I don't know. I look at things, maybe I just look at it differently than most others, but I just buy it. I mean, if platinum goes to $6,000 or $10,000 an ounce in 4, 5, 6 years or whatever it's going to take, I don't know the exact timing. Is buying something with a little bit of a premium a big deal? And then when you go to sell it, let's say it's $50 under the spot price. Okay, fine, whatever. It's the cost of doing the transaction. If you could do a like for like exchange, I mean, you don't have to pay taxes. That's going to save you a lot. If they do something crazy and they start taxing unrealized gains, well, what are you going to do there? People are going to be running to this stuff. It's the most private investment in the world, and I don't know how they're going to tax it. I don't know how they're going to know that you own it. So it's just a way to diversify your holdings outside of the system that I think are a little bit harder to tax. That's just me. I'll end it here, guys. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.